Good morning, folks, and welcome to the Rahul Nair Finance Show. You're listening to the Daily Deal Room, from startups to stock markets, where we decode the business buzz of the day, crisp, clear, and to the point.
This podcast is for educational purposes only. It is not a buy or sell recommendation. Always consult a financial advisor before making investment decisions. Okay, let's dive into this. Here's what we're covering today.
All right, so today we're hitting the market wraps, some big company news, and the global economic pulse. Then we'll shine a spotlight on the PhonePe IPO, get into a really interesting industry insight on Intel, and round things out with the private markets and a fundraising roundup. So, first up, let's see how the markets closed yesterday, September 24th. All right, let's take a look, and yeah, it looks like we saw a bit of a dip, some downward pressure really across the board, not just in India, but internationally too. So you can see here, it's pretty consistent, right? A moderate dip across all these major indices. Nifty Bank actually took the biggest hit, down about 0.70%. And you see even the US markets, the Dow and the Nasdaq, they ended in the red. It just kind of points to a day of broad caution for investors. All right, so let's shift gears from the broader markets to what's happening inside some key companies. And first up is the food tech giant Swiggy. Man, they are making some really significant portfolio adjustments right now. Get this, they've sold their entire stake in the bike taxi platform Rapido. And they cashed out for nearly 2,400 crore rupees. I mean, that is a huge return on what they originally put in. So what's going on here? Well, this is a classic strategic pivot. Think about it. They more than doubled their money from their 2022 investment, and they're getting out right as Rapido is jumping into food delivery, becoming a direct competitor. It's a really smart play to avoid that conflict of interest and, of course, unlock a ton of value for their shareholders. But hold on, that is not the only big change they're making. They're also spinning off Instamart, their quick commerce arm, into its own separate company. You know, this looks a lot like what Zomato did with Blinkit. It's probably a move to put a laser focus on that quick commerce segment, which, let's be honest, just burns through cash, and make it a more attractive standalone business for future funding. And this timing is interesting because it comes just as analysts over at JM Financial are saying, hey, Swiggy really needs to raise at least $500 million, to beef up their balance sheet with all the crazy competition out there. So this whole Instamart restructuring, it could very well be the first step to landing that kind of cash. Okay, let's zoom out from company specifics and take a look at the broader economy. And we'll start with a pretty strong projection for India's growth. So, India's Chief Economic Advisor V. Anantha Nageswaran is projecting growth to be right around 7% for the next fiscal year. That's really solid. So the big question is, what's behind all this confidence? Well, it looks like this optimism is being fueled by a few key things. You've got the GST 2.0 reforms, which are simplifying taxes and should boost spending. Then there's foreign direct investment. It is just pouring in and could even cross $100 billion this year. Plus, with inflation looking moderate and the fiscal deficit shrinking, the underlying fundamentals just look really solid. And let's not forget the whole China Plus One strategy, which is bringing a lot of manufacturing interest our way. And it's not just the government that's optimistic. HSBC is reflecting this sentiment too. They've just upgraded Indian equities to overweight and are forecasting the Sensex could hit a whopping 94,000 by the end of 2026. I mean, that's a potential 13 to 15% jump from where we are now. That is a very bullish call. So why the upgrade? Well, they're pointing to a few things. Market valuations have cooled off a bit, making them more attractive. The macro backdrop is looking good with inflation at an 8-year low. And maybe most importantly, domestic investors, our local investors, are providing this incredible stability with resilient flows. Oh, and the potential impact from US tariffs? Pretty limited since less than 4% of BSE 500 revenues are exposed. Okay, now let's shift gears a bit to some global tech partnerships. This is a big one. Alibaba has teamed up with Nvidia. What this means is that Alibaba's cloud customers will now get access to Nvidia's entire suite of software for robotics and physical AI. We're talking about the cutting-edge tools you need to build things like humanoid robots and autonomous cars. And the market absolutely loved this news. Alibaba's shares in Hong Kong shot up 8.5%, hitting their highest price in almost 4 years. It just goes to show you how much investors are valuing these kinds of strategic AI partnerships at the moment. Speaking of Nvidia, its CEO Jensen Huang also weighed in on U.S. policy. He commented on President Trump's proposal for a $100,000 H-1B visa fee. Interestingly, he framed it as a move to make sure the U.S. attracts only the absolute brightest minds. And of course, all these global shifts have knock-on effects.
Back home, the rupee's hovering near 88.7 to the dollar, feeling a bit of pressure. And if you look elsewhere, there are still signs of weakness. For example, Japan's manufacturing PMI fell again. That's its 14th contraction in the last 15 months. Yikes! All right, let's talk about what is easily one of the most anticipated market debuts in India, maybe ever.
That's right, the Walmart-owned fintech giant PhonePe has officially kicked off its IPO journey. They've confidentially filed their draft papers with SEBI. Now, doing it this way, the confidential route, lets them keep their sensitive financial details under wraps until they get much closer to the actual listing date. Okay, let's break down the details. The target raise is a massive 12,000 crore rupees. They're aiming for a valuation of around $15 billion. But here's the crucial part. It's a pure offer for sale, or OFS. What that means is the company itself, PhonePe, isn't getting any of this cash for growth. The money goes directly to the selling shareholders. We're talking big names like Walmart, Microsoft, and Tiger Global, who are basically cashing out a piece of their investment. And the bankers on this? All the heavy hitters. Kotak, Citi, Morgan Stanley, and JP Morgan. And you can see why they're aiming so high. I mean, their market position is just undeniable. Just look at these numbers from August. They're handling nearly half of all digital payments in India, both by volume and by value. This huge, engaged user base, that's the real crown jewel. It's the foundation for everything else they're building, like their expansion into insurance, lending, and wealth management. Okay, so from fintech, we go to fast fashion. Our next story is about a really interesting strategic experiment, and this time it's all about delivery speed. So in what has to be one of the more fascinating mashups of luxury and logistics I've seen, the premium fashion brand House of Rare, you probably know them as Rare Rabbit, is partnering with Zepto. For what? For 10-minute delivery of their clothes. It's a totally wild experiment in the quick commerce space, and it really starts to blur the lines of what you can expect to get delivered in minutes. Okay, now for our industry insight, our deep dive for the day. And this is a really fascinating story about a fallen giant and a strategic alliance that could just maybe change its entire future. Yeah, we're talking about Intel. So to really get what's been going on with Intel, you have to understand this one concept, chip yield. Let me give you an analogy. Think about making tea. The very best, most delicate leaves get turned into super expensive white tea. The rest, well, they become your standard green tea. It's the same with silicon wafers. The percentage of perfect, defect-free chips you get from one wafer, that's your yield. The higher the yield, the more efficient you are. For a long, long time, Intel's problem was that they were producing way too much green tea. And while Intel was stumbling with these poor yields, rivals like TSMC over in Taiwan were absolutely mastering their process. They had excellent yields. So Intel lost its performance crown, its foundry business turned into a massive money pit, and, well, investors started to lose faith. It was a tough period. But things are starting to change. Recently, two huge players have thrown Intel a lifeline. First, the U.S. government stepped in with an $8.9 billion investment for a 10% non-voting stake, signaling just how important Intel is strategically. And now, in a really surprising twist, its rival, Nvidia, is not only buying a 4% stake for around $5 billion, but they're also becoming a major customer. Intel is going to manufacture custom chips for Nvidia's data centers and GPUs. So that brings us to the billion-dollar question, right? Why on earth would Nvidia, the undisputed leader in GPUs, invest its money and its future products in a struggling rival? Well, the answer is actually pretty simple. It's all about having a plan B. It's risk mitigation. See, right now, the vast majority of Nvidia's most powerful chips are made by one company, TSMC, in one place, Taiwan. And given the geopolitical climate, well, putting all your eggs in that one basket is a massive, massive risk. Nvidia needs a backup plan, and a resurgent Intel, based safely in the US, starts to look like a very, very attractive one. Now, let's be clear, this is not a miracle fix. Intel still has a really steep climb ahead. The big challenge is proving they can actually deliver these chips on time and at scale without the yield disasters of the past. And the reality is, the first chips they make for Nvidia won't even be their most advanced AI GPUs. Plus, financially, they're still in a tough spot, posting a massive loss of nearly $19 billion last fiscal year. And all this while their other big rival, AMD, continues to steal market share in PCs. But despite all those challenges, investors reacted swiftly. Intel's stock shot up 22%. That's its sharpest rally in years. At the same time, AMD's stock took a 5% hit. What does that tell you? It suggests the market sees this deal as a potential and pretty significant shift in the balance of power.
So, at the end of the day, this deal gives Nvidia that plan B it so desperately needs, and it gives Intel a real shot at relevance again. But the big question remains, is this the start of a genuine comeback for Intel, or is it just Nvidia making a very clever move to hedge its bets?
All right, let's move on to our private market pulse with a quick but really crucial term from the startup world.
So, today's word from the Startup Dictionary is back channel. What is it? It's those informal, off-the-record conversations you have, maybe with former employees, other investors, or industry contacts. In the world of fundraising and recruiting, back-channeling is absolutely crucial for gathering real intel and doing your homework.
And finally, let's wrap things up today with our fundraising roundup, taking a look at who's been raising capital in the Indian startup scene.
Now we're seeing a pretty good flurry of activity across different sectors. We've got Zealthix in healthcare SaaS raising a $1.1 million seed round, Amwoodo in the sustainability space raising $4 million. And then, a big one. Chakr Innovation, a deep tech company, closed a $23 million Series C. It really shows there's investor appetite all over the map right now.
And one more that's definitely worth noting is the savings and investment platform Gullak. They've just raised $7.5 million, led by Cr Ventures, and their plan is to use that money to expand into Tier 2 and Tier 3 cities, which, as we know, is a massive growth area for fintech. It's great to see they're backed by folks like Y Combinator and Kunal Shah from Cred, too. That wraps up today's episode of the Rahul Nair Finance Show, brought to you under our daily series, The Daily Deal Room, from startups to stock markets. If you like this episode, don't forget to like, subscribe, and share with your friends, colleagues, or anyone who's into business and investing. We'll catch you tomorrow with more updates. Until then, stay curious, stay invested.